Hi, madam. I'm Divashini. So today I'm here to explain about the amalgamation question of September 2022. So these are the question. So for the first one, they had asked for calculate goodwill of pine and palm. So for calculating the goodwill, the format will be purchase consideration of ordinary share in Drew 5%, ordinary share in Drew. So we need to see the additional. So for the additional, they stated pine ordinary share is 3,900,000 and the farm is 3,800,000. Okay. So for pine is 1,300,000 with 5% preference share. So 5% preference share pine and following by 6% preference share for PUM, which is 920,000, and the cash as stated 25,000 and 17,000. For the liquidation expenses, we should calculate it from the additional, which means this is the additional. So for Pine, paid by RU is 1,600, but for PUM, we should calculate for 45%. So we should times 7,900 with 45%, we will get 3,555. So after that, we should plus everything from here, and this will be the total purchase consideration. After that, we should calculate the net asset value of pine and palm. So for the net asset value, first we should take all the assets from the question. For therefore, the addition from the additional, we had two assets, which is land and building and motor vehicles. For land and building, pine is 2,800,000 and palm is 3,150,000. Motor vehicles 660,000 and 100,000. And then furthermore, we should see the SOFI whether there are more asset or not. So the asset inventories, trade payables, trade receivables, bank. So we need to take this amount, and state here. But for the bank, since we had calculation for bank, we should calculate from the additional, which means Bruce and Jan Berhad will take all the assets and liabilities of Pine except 35% of its bank balance. So when we minus the 100 with 35%, we will get 65%. We should times with this amount from Pine Bank, and then we will get 175500. And as same to Palm, Cinderella will transfer all the asset and liabilities to Ru except 700,000. So we should minus the 700,000 with 200,000. We will get 1933000. And then trade payables from current liability, we should state 161000 and 450000. And then we should plus the asset and minus with the current liability, we will get this amount for net asset value. Forget goodwill, we should take the total purchase consideration and minus with net asset value, and it will get Pine 1841100, Palm 1167555. So that's all for goodwill. And then they had asked to do prepare all the relevant journals for Palm. So first we need to close the Palm's account. So for closing Palm's account, we require to do 10 journals. So for the first journal, journal 1 is about the purchase consideration. So debit is true and credit is realization account. Why debit is true? Because they are the one who receivable. Who is the one receivable their own, and the credit is realization account because it is a temporary account to settle all the liquidation expenses. So this we need to take from the total purchase consideration of PUM. And then the second journal is about the assets. So we credit all the asset because we releasing the assets, which means land, land and building, motor vehicles. We should take this amount from Sophie, and then inventory, trade receivable, and for the bank only we need to take from the goodwill because there are some calculations at the additional. So if we take from the goodwill, the amount is 193000. And then we should plus everything and debit it to realization account because they are the one release their assets. Then journal 3. Journal 3 is about trade payables. So trade payables are debit because they are already paid, and the realization account is in credit because they are realizing the amount. So trade payables amount we need to take from here, which is Sophie. And then journal 4. Journal 4 defines to calculate the investments. So for debit is investment in ordinary share, investment in 6% preference share, cash, and realization account liquidation expenses. This all stated in debit because it's considered as purchase consideration has received. So from here, investment in OS room, we had take the amount from the additional. Okay, for the question. Okay, for the additional, we can see. Okay, investment in row, 3,800,000, and investment in PS 920,000. Cash is 17,000, and the liquidation expenses we should take from the goodwill from here. So when we plus everything and credit it to true, it will be the amount need to be same to the total purchase consideration. Why credit is true? Because it is the total purchase consideration. So journal 5. Journal 5 is about sundry member account, which means we are releasing the amount to the respective owners. We transfer the amount to the respective owner. So when we do the journal 5, we should refer journal 4. Okay, so for now, the first one is debit sundry member account ordinary share 3,800,000, and the investment credit investment in OS is 3,800,000. Why that journal 5 debit shows sundry member account is debit because um, sundry member account are reducing from the account. Sundry member accounts amount is reducing from the firm's account. So that's why they are debit, and the credit is investment in OS of group because the investment had been increased in equity. So the investment when the investment increase in equity, they will be credited. Okay, same goes to the second sundry member accounts preference share and investment in sorry here preference share of rule 92,000, and the third is about cash. So the cash had been credit because of when the cash is decreased in Drew's company, it will be credited. So continue with journal 6. Journal 6 is about zeroize the bank account. We should zeroize for the bank account. So for the first one is we should state the credit first. Bank is from here. Bank is from here 700,000. 7,000 is mean to the amount that not paid yet to the paid yet. So here, and then the realization account should be debit. I wrongly put it. So debit realization account LE. We take this 7,900 times 55%. Why 55? Because we should minus the 45 from 100. We get 55, and then after we times we get 4345. When we minus these two, we will get 2655. We'll get 2655. So this is the sundry member accounts ordinary share, zero rise ordinary share. And then the journal 7 is about the preference share. Okay, journals are preference share is debit because preference share, ordinary share, retained profit are considered as equity. So when the equity is debit because we are reducing it and we are removing it from the accounting. So this amount we should take from the Sophie. So preference share 800,000 and then ordinary share is 1,280,000. We tally it with sundry member account ordinary share. And then for the retained profit is 1,550,000. This also we tally with sundry member account ordinary share. So that's all for journal 9. So before we do journal 10, we should do the realization account. The realization account for the debit side, we should take all the amounts until bank from journal 2. Okay, journal 2. Since this all is stated as credit, we should debit it in realization account. And then this rue and trade payable are from journal 1 and journal 3. We just need to put it in the debit credit side since it all state in debit. Okay, and then the rule of liquidation expenses is from goodwill here, goodwill, and then the another one is from journal 6, 4345 or 4345. Okay, 4345. So for calculate the profit, we should calculate the large amount, which means in credit side, we should plus it and tally it, and we should minus the tally amount with this thing. So when we minus this thing, this whole thing, we will get the profit, and then this is the profit. The after doing the profit, we should do debenture of sundry member accounts preference share. So for the preference share, we need to take the new amount of preference share, which means 920,000 minus with old 800,000. We will get 120,000. We need to minus the profit and SME preference share to get SME ordinary share. So that's all for realization account. And the last journal, which is journal 10, is about distribute profit from the liquidation expenses, which means we had to profit SMEPS and SMEOS in realization. We need to carry forward to journal 10, which means debit is realization account. Why the realization account is in debit? Because profit is to know about a company is profit or loss. So when it profit, it should be debit, and when it loss, it should be credit. So we should write realization account 160965555, and then we should credit the both amount here, SMEPS and SMEOS. So that's all for journal 10. So the last one we need to do is sundry member account column ledger. So for the debit and credit side, debit side we need to list down all the assets, and credit side is about the equity. So investment cash banks are considered as um, assets. So investment in room we can see from here. Investment in row, we have 3 point, which is ordinary share, preference share, and also cash. We need to take these three amounts. Okay, for the investment in row, ordinary share, and preference share, we should write like this. And cash is here. For the ordinary share only we had cash, and the bank is we need to take from journal 6. 2655. The balance we need to calculate it in sundry member account. And then that's all for debit side. For credit side is 4% preference share, ordinary share, retained profit. So 4% preference share we should take from the Sophie. Okay, we had to here. Okay, here 800,000, 1,000,000, 280,000, and also 1,050,000. Okay, write it in ordinary share. Uh, Preference share in preference share, ordinary share here, return profit is stated it's ordinary share, and then the last realization account from here we need to take these two credit and ordinary share is 1489655, and then the preference share is 1 to 120,000. So when we plus this ordinary share and preference share, debit side ordinary share and preference share, credit side ordinary share and preference share, it should be tally, which means the ordinary share of debit and credit should be tally, and preference share of ordinary share, preference share of debit and credit should be tally. So this that's all from me. Thank you, madam.